Welcome to Power Charting. I'm Bruce Fraser, your host. We are going to go into Wyckoff 2022 Outlook, mopping up what we talked about and started with last week. But we have with us today a special guest. We have Johni Scan, our scan master. Johni, thanks for being here.
Great to be here, Professor. I'm very excited to see what's going to happen in 22, and I'm looking forward to hearing from you about that.
Well, we have a few things to button up from last week, and I'm glad you're here to talk about it with me. And today's agenda is going to be that we're going to talk a little bit more about the CRB in relationship to interest rate trends historically, and asking the question, are rising interest rates negative for the CRB trend? And also we're going to look at a long-term stock index trend and when we should start to worry about the trend being over. Then look at some breadth indicators. We're going to look at the triple Qs, have a look at the gold chart monthly and bring that up to date, and look at some swing trading gold and gold miners point and figure studies. And then we're going to dig into stock selection with Johni Scan. So that's exciting. So the thing here, John, is that we're really focused on and concerned with participating in the uptrend of the bull market, the markup phase, so to speak. And so we are essentially asking the question, where are we? Are we in the middle of this trend? Are we late in the trend? Is it over? And of course, the trend is our friend. We stay focused on the trend as long as we think it's viable. And here you can see this Wyckoffian chart that Ramon created, which is essentially the structure of accumulation, markup, distribution, markdown. And what we have is we have this interspersion of reaccumulations in the uptrend as we go. And then we have this big distribution. And so what we want to know is, can we continue to participate as we see these reaccumulations forming? And John has for us today some examples of stocks that are doing that very thing. And also the other thing that you get as you go through an uptrend is you get rotation. And we seem to be seeing some rotation occurring now. Here is a chart, John, of the Commodity Research Bureau index on the top going back to 1956. And then we have underneath it, this is the T-bill interest rate trend that also goes back, in this case, into the late 40s. Now, what I've done is I've shown in the green boxes when the T-bill rate is falling, and you can see that in these different green boxes on the way. And then the yellow box is when interest rates are rising, and that would be a measure of a strong economy, the Fed being somewhat in a tightening type mode as defined by just interest rates being in an uptrend. And you can see here that the Commodity Research Bureau index is when rates are going up, you have the CRB going up. And here you can see this in each one of these cases. And often it's preceded by a drop in rates with generally a recession or an economy that's somewhat weak. Now, here is an example here where, which is a little different because rates went up and the CRB went up all the way into the highs. Now, this is in the period from 02 to 08. And already the Fed was dropping rates in the 08 period, even as the CRB was going higher. The other thing that happened is we can see here a very long period from about 08 to 2016, say, where rates were zero bounded, and then they started to go up. The CRB really didn't go up much in this period, just along this area, and then it started to really break down. Well, now since this period in 2018, interest rates have really dropped again and are back zero bounded. But look what's happening to the CRB, it's starting to run up. So the big question becomes, John, what happens when interest rates start to rise, as the Fed is promising us they're going to begin to tighten? And does that actually kick off a bigger rally in the CRB? And history tells us that that is the typical relationship. And so wondering whether or not continues to be pressures on inflation as measured by one attribute of that being the CRB index, among others. There's other inputs into inflation. But whether or not when the Fed starts to raise interest rates in earnest, that it may actually be a signal that the CRB is going to be in an uptrend for some period of time to come. Just amusing on my part that this could happen. What do you think,
Professor,
John?
could you give the folks at home an idea of what would be included in the CRB? Steel, coffee, what's in there?
Yes, well, and you certainly can go and look up. About a third of it, as I recall, is crude oil. And so there's other measures of commodities, other indexes which have different mixes in them. And so there is a somewhat large component of energy in this, but also there are these other commodities that are, soft commodities, foods, and materials like cotton, coffee, corn, and so on. And so these elements are in there, and it's just a question of which one. And there's no perfect indicator of commodity prices, but here we look at this and we can see that generally the trend is higher, and you can look at the correlations of different indicators and compare them. But and also StockCharts.com has got a few different commodity indexes that you can go in and look at, or look at the individual commodities themselves. So
well, potentially this is bad news for those of us who are coffee drinkers.
Oh, commodity and coffee has just been doing incredibly well. I mean, in terms of going up, and yeah, coffee is it's something that I drink enough of that I should be hedging. I should be hedging my coffee consumption.
Stock
anyway,
up now, huh?
Yeah. So here's the U.S. Treasury T-bill 3-month. Again, just the rate here going back into the 50s, and then the CRB on a 12-month rate of change. And all I did here was these green arrows is when the CRB climbed above zero on a 12-month rate of change basis, meaning that now year over year, it's positive. And so you can sort of see that happening. Tried to line it up in here and in here, and you can see that in each of these cases that interest rates generally are rising or about to rise when that happens. And so this is real. So now you can see just this big lift off now in the CRB above the zero line, and we don't even have interest rates rising yet. And so the Fed has promised us that they will in 2022. The question is how fast, and also what effect QE could have on this in accommodation, and whether or not the Fed actually does reduce their balance sheet. But here's maybe the way to look at this, John, and that is that here is the S&P monthly. It's just a solid line with a Keltner channel attached or laid over the top of it. And you can see that, and this goes back to 99, that what happens is in a bull run, you'll go up and you'll hug the top of the Keltner channel for a long, long period of time. This is like 2.5 years. Here you can see this is about maybe as much as 3 years. And the thing that happens as we get to the conclusion of that is that we'll have distribution. And the distribution will tell us that, and we had a small one here, is that that's a Wyckoffian concept. You can see one here too. And that is a Wyckoffian concept that is identifying the slowing of momentum and the preparation for a more important decline. And part of what you'll see here is that the market will start to slow away from the upper Keltner channel as that's happening. And we are still hugging the top of this channel and could for months. Now, the other thing we can look at is the MACD, because the MACD will fall below this red moving average line just about the time that you're pulling away from the Keltner and starting to go into a more important decline. And look at how far above this red moving average the MACD is at this time. So again, you know, we're going to look for distributional characteristics at the conclusion, but so far the momentum seems quite strong, John.
It's a phenomenal slope on that MACD line in the last couple of years. You don't really see anything like that on the whole chart back to 99.
Yeah, it's really steep, no question. And I would say that we should be just using the MACD as just sort of a basic idea of trend and trend slowing, trend momentum slowing. That seeing it cross, I think, is an important warning. And it's a good thing to just keep track of, you know, on a month-to-month basis as this long-term MACD. Now, let's look at interest rates as they relate to the stock market. So here, what I've done is I've gone back, in this case, this is 1994, and you can see that rates are rising. And here, rates are rising. This is the Fed funds rate. So this is the rate that's really controlled typically by the Fed. And so notice that as rates start to go up, which I think is really an indication initially of a strengthening economy, look at what stock prices do. And this is this yellow shaded area. And notice how when rates went up in 2016 into 2018, 2019, that when rates were rising, so was the stock market. And then they started to, interestingly, they were dropping rates even before the COVID peak hit in the first part of 2020. And then we had that big break. And so here we are. Rates are zero bounded at this time as they were back in the early part of the last decade, zero bounded again. And so the question is, what happens when rates start to go up in earnest? Will this be correlate with a strong economy? And also, will it associate with further higher prices in stocks? And so again, history tells us that rising rates is not something we should necessarily be afraid of. And then here we have, this is a breadth indicator, and I'm just pointing out that breadth can be very illuminating. This is stocks above their 50-day moving average on the NASDAQ. And it's always interesting to look for higher lows as a non-confirmation. And so here, a lower low in the NASDAQ 100, higher low in the NASDAQ breadth. But now what we want to see is we want to see this line start to go up. Directionality is also important in an indicator like this, which shows that breadth is broadening out. Here's the 200-day, much slower to react. Again, higher low with a lower low. Now this is the ARK fund. And so this is interesting, John, because this is an actual portfolio that's kind of a measure of many of the growth stocks that's in the NASDAQ at this time. So
fascinating.
And then finally, we have the triple Qs. Today was a pretty rough day, Thursday, and the triple Qs, you had a very sharp drop down to this uptrending channel. Look at this channel where the March low and the May low of 2021 essentially established the upward trend. And this is the way Wyckoff likes to draw trend lines, with an overarching overbought line that's parallel on the intervening high. Look at how beautifully this has worked. And then a overbought condition here and here, and then a range bound condition because this overbought produced a big automatic reaction. And so now this is a very important area for us to keep track of, John, because we talked about this in Wyckoff market discussion on Wednesday, is that this rally here, what we wanted to see was this rally be able to go right up to the resistance area and then see how it reacted from there. And that if it had a rally of poor quality that went up into the midpoint of the range and then turned back down again, that would be a sign that the structure may not be over and may actually have some distributional qualities to it. So John, your thoughts?
Certainly is a different market than say 2019 or 2020, where there were just so many tight range days. I think we were setting records for the time period within which we didn't have a 1% move plus or minus on some of the major indices. And here we have a 2% move. It looks like one of really several in the past couple of months. So something is afoot here.
Interesting, because look at the volume come in as you're getting a breakdown towards support. So it shows there's still a lot of supply. And what we really want to see as Wyckoffians is to see something akin to this, where you have it become more dull and quiet and then have the volume dry up as it's doing that. Attempts to pull back to the midpoint. And of course, we're not getting that. And so we just follow the tape. That's what we do here, is just let the market tell us where it wants to go. And so the support area, now that it's returned to, is remarkably important in my thinking. And it could be that there's a lot more work to do. So interesting place. And also it puts this upward trending channel since March in jeopardy.
Really, there's two lines operating there. One is the support of the current structure and the demand line of the long-term up channel. So there's a couple of very important things going on, and there's a sort of confluence of technical areas to be concerned with here.
Look at this beautiful acceleration into a climax, into the overbought condition that ultimately set up the range bound condition. And we draw the resistance right on there, and notice how this resistance has held so well. And even though it can up thrust the top of that resistance, it can't hold it, fails back into it. And that this decline down to through both support and the demand trend line is a near-term sign of weakness. And of course, we worry about those because lower lows in the structure are a sign that supply is ever present and needs to be absorbed and may not be. So very interesting.
Absolutely.
And then finally, I want to just show this one chart here, where this is the New York. And I think there's rotation, as we talked about last week. And this is stocks above their 200-day on the New York Stock Exchange, which are the more staid, old-fashioned, industrial type companies and more mainstream. Not all industrial, but they're not the high-flying growth stocks that we're used to seeing in the Nasdaq. And so here's this upward channel, upward trend. We could extend that trend line there. Not a very good job on my part, but notice what's going on. Higher lows through here. We just were looking at lower lows in the triple Qs, Nasdaq 100. Here we're seeing higher lows in the S&P 500. And look at this divergent. Well, it's not really a divergence. It's a really a higher low here from this low and this low, which really shows internal improvement. And the other thing that we're seeing here, where The breadth indicators for that we saw for the NASDAQ were in the 20% range, meaning that 70% of stocks are below their long-term moving averages. Definition of a trend, we have the New York stocks above 50%. And so over half the stocks on the New York are still definitionally in an uptrend. And we're getting higher lows here. So this is a better looking picture in my mind than what we're seeing in the more growth oriented NASDAQ.
Absolutely, very interesting and moving in a direction other than the NASDAQ right now a little bit.
Last thing is, I won't spend a lot of time on this. This is monthly bars, and we're going to talk about stocks. John and I, at the conclusion of these comments, we're coming to the end of our time in this, the official 30 minutes, but we're doing an overtime segment where we're going to go into overtime, talk about some stocks in a scan that we're working on that you're going to want to know more about. What we have here is we have gold monthly, and this is the chart. This is the rally from the 2018 low, which was just really a good rally. And then since this time in mid 2020, gold has really just sort of been in a kind of in a range bound state, weak early, and now it's in some kind of a pivot type structure. A hinge can go either way from here, sort of like what it did here. And in this case, it resolved downward. This could resolve down or up, hard to say at this time, but we're getting to that essential sort of moment for gold as a commodity here at this time. And so really just a fascinating place, John, and it's hovering right up against the 2011 highs that it made, which this whole area could really prove to be some kind of an important reaccumulation type structure after a big bull run here. So if you put it in the context of monthly bars, really an interesting place. And so something for us to keep an eye on, because it could go either way out of that hinge. And then John, what I have here is 2-point figure charts. These are one box reversal, point figures, traditional scaling. And all I did was I did little swing trading counts on GLD here and on GDX, the mining ETF here. And so you can see this count here goes up to 190. And this puts us in the range of the prior highs. And again, it's got to jump out of this hinge to do it. And it may not, may go the other way. But in the case of the GDX, you can see another really small little hinge with a small count goes up to 38 from this 31.5 area. Now, these green arrows here and here and here represent, and I like to try to visualize what the count could look like going forward. So let's say we get this kind of a move, then this maybe becomes a larger count that's available. Same thing here. What do you think, John?
Well, I just filled out my dance card with GLD, so I am certainly hoping that those are bigger counts out there.
Well, and we're right on the hinge, so I think we'll know shortly with a surge one way or the other. So the key is just to put our stops in intelligent places. So just fascinating situation here, and look at this downtrend. Both of these have really well-defined downtrends in the point figure. All right, and with that, John, we are going, I'm just going to put this up. This is a Bitcoin. This is the distribution count. I think it's a very well-defined count, and it counts down 46 to 44, 43.5, and then a lower count, which is just taking the width of this entire range, gives us a countdown to 41.5, and that's where we went. So I'll be very curious to see whether a cause can build here in Bitcoin, which could be redistribution, or it could be maybe another accumulation structure. Hard to say at this time, but it is somewhat range bound since hitting these counts here. So I just wanted to show people that so that they could keep an eye on that on their own. And with that, John, I want everybody to stick around, because if you're watching on demand, we're going to go into overtime and we're going to cover some stock selection for about another 10 minutes or so, and it's going to be well worth your time. So, John, shall we do that?
Absolutely.
We are back, and we're with Johni Scan, and we are going to talk about a project that we're both very excited about, which is scanning for Wyckoff conditions, Wyckoff setups with our scan master, Johni Scan. And John, tell us a little bit about what the thrust of your work is with the Dream Scan.
Well, what we're looking to do is create different scans for different opportunities in the market. We're going to begin with one that looks for reaccumulations. We have Professor Bruce's input on the specifications for that scan. It is a work in progress. We're starting with some interesting concepts and time periods, always subject to refinement. So we're going to look for some very classic hallmarks of Wyckoffian reaccumulation, and that is simply there's a prior period during which there was an uptrend. That uptrend pauses for a period of time, builds cause in the parlance of Wyckoff, and then moves up and out to a higher level of price over time. So that's a reaccumulation type analysis, and that's what we're working on with the Dream Scan.
John, the thing that we have talked about in reaccumulation and the whole concept of it, and also this is true of accumulation too, is, and this is what's so ingenious about the Wyckoff method, is that it looks at context. It looks at the conditions as a stock chart goes from being in uncontrolled hands into highly controlled hands, which is the smart money, which is under absorption. When a reaccumulation begins, volatility is extremely high, generally, and then it diminishes with time, and that is the context that we're working in and looking for to tell us that accumulation or reaccumulation is nearly complete, and that an uptrend can start and prices can move easily and continually in a good trend. And so this is one of the things that you've done such a nice job of being able to scan for, is the condition of diminishing volatility. And so is that attribute or element in the Dream Scan?
It is. And one of the aspects of the Dream Scan is to look for constriction of volatility. And the vehicle we're using in this particular instance, Bollinger Bands, the width of the bands, how far apart are the bands? Generally speaking, the further the bands are apart, the greater the volatility. The closer together, the lower the volatility. So we have a chart that really illustrates the expansion and contraction of volatility along with really interesting Wyckoffian price movement. So the EVRG, conventional electricity stock, we see way back November of last year, quite a significant jump up, big supply tails on the band bars in mid-November. See the bands moving apart for that period of time, and then 2021 January, February, we move into a small structure along the resistance support area of this initial large structure, move up and out, and we see really late February, early March, the bands have contracted considerably at that time. And we move up out into another structure, which would be another phase of reaccumulation. And we're again in a structure at a higher level now, with the bands quite constricted over the last 4 to 5 days. We do see we still have an uptrending 200. That's one of our dream scan elements. And we have a positive slope on our scooter line. It is slightly flagging under its moving average right now, but over the past quarter or so, it's still positive. And that gives us still the hope of an upward momentum and reaccumulation. Some degrading of technical indicators like the scooters can be expected during reaccumulation because it is a pause in otherwise momentum moves. So it does happen. Your thoughts, Professor?
Yeah, reaccumulations will discourage traders, and they'll get discouraged because they take time, they're volatile, they're non-trending, and they just give up and they go play in other playgrounds. So
absolutely.
So the scooter would be a good reflection of that. And then also relative strength can be too. Relative strength will tend to underperform during the reaccumulation process. And you can really see that from November back to March on this chart in the last, from 2020 to 21. And the volatility is generally drying up as that's occurring. So a great example in this chart of those conditions.
Absolutely. And nice stepping stone reaccumulations.
Yeah.
Our next chart, venerable industrial machinery firm, Parker Hannifin, and has had a long horizontal period after a prior uptrend. So we had a structure that formed and attempted to distribute, but really didn't push price down too far. It's really held in the 278 range for support. And we've now had a breakout of sorts there, but pulled back into about halfway into the structure, and we're moving across the range of overhead resistance back and forth there. We do still have a rising 200, but it is flattening out. And we have positive momentum and slope on our scooter as well as our relative strength line. So a lot of potential cause being built here. Wouldn't you say, Professor?
I do. And one thing that really stands out to me about this chart is if you look at in 21 from the, say, late July, beginning of August period, and the peak in late August, and then the peak in October, each one of those is a little lower, but you can see that the amount of momentum, the weakness that shows up in each downward surge is diminished. And so that takes on sort of the attributes of absorption, a trend line that's downtrending, but also there's no ability to be able to break down the stock price. And it just becomes very dull and quiet into October, and then the uptrend begins. And so, or an uptrend of sorts begins. And that's what I would call a sign of strength. And then the backup into the beginning of December could be very well be a last point of support, which are terms we use in Wyckoff. And that looks terrific. And the relative strength is trying to turn up in here. So looks great.
A lot of positive things on a great company.
Yeah, very good.
Now we have something that ties directly into the main body of the presentation here, and this is a specialty REIT involved in timber and timberland, which corresponds to the CRB to some degree. What do you see here, Professor?
Well, if you look at the upward trend into May there, which is the beginning of the big blue rectangle box, you can see that there's some kind of a distribution that forms. And then into the beginning of June, there's a lower high and a total breakdown, which shows that that was in fact a local distribution. That weakness into June is the volatility that we see as reaccumulation begins. Then it spends all this time living in the bottom half of that trading range, which is not uncommon, but look what happens starting in August. So in August and September and into late October, you have higher lows being made throughout there. So even though it can't get its upward trend going, those higher lows demonstrate that there's demand and support under this stock, and it's trying to finish an reaccumulation structure for a larger uptrend, and that's exactly what we got beginning in December. So, and the relative strength confirms that as it's rising. I think it's very important to start to become serious about a stock when you have price turning up and making higher lows, and the relative strength is confirming that. And so you have those conditions, and also the scooters rising there. So all good. And you like to put OBV into these scanning concepts, and the OBV, which is a measure of volume, is also rising nicely too. So there's a lot here that's occurred since, call it September, that's been very constructive in this structure of the stock price.
Right. Some of the interesting things that we see here and do form scannable events for us are shorter term moving average cross with the OBV, and notice right around the same time the scooter crosses its moving average, and we begin to have positive slope on the moving average. Same with relative strength here and scooter here. So we have three indicators all moving over longer term moving averages and adopting positive slope with that longer term moving average. Very, very powerful combination. And then some weeks after, a little delayed in this case, we do have the 50 crossing the 200 moving average, otherwise known as the golden cross. So a couple of very interesting things there. And these all form scannable events. These are things that we can look for as Wyckoffian scanners that will help us find points within a structure that could give us opportunity.
Exactly. And that's our big mission in 2022, is to be able to identify these and be able to share with you the attributes of these scans so that you can start doing this also.
Absolutely.
Okay.
Here we have HCA, and I really regard this as such a pure illustration of the Wyckoff principles. And we see constrictions of volatility, expansions of volatility, long horizontal structures following uptrends. We've put cycle lines on here at 63 periods. That's one of the time periods that we're looking for with the Dream Scan. That's a quarter of trading days, and a lot of institutional investors really think about their book in terms of quarterly performance. So this is really just a 2 quarters of structure. Beautiful, beautiful structure. What do you see here, Professor?
Well, what I really like is after a spring type structure forms with a probe in late November at the beginning into the beginning of December, a probe of the support area breaks through it and it stalls there, very high volume on the about the low day, which shows that there's demand in that big bar late November. And then immediately it turns its character into the best rally that has occurred throughout that whole structure back to July. So that is a really good sign of a change of character in that chart. And it results in a push up to a minor new high into the end of the year, beginning of January. Now it's having that one pullback, and so attempting to pivot back up again. And so each one of those lows off of that spring is a higher low, which is, I think that's the case, maybe not, but close. And so now we want to see resolution above the previous high at the beginning of January. So this is really just a great looking chart, has a lot of potential in it, and it could be a demonstration of the rotation that's occurring back into these more, you know,
The
mainstream
value
type
oriented
stocks.
stock.
Yeah,
It
the
trades
value,
under a
yes.
13 PE with a dividend. And, you know, certainly healthcare is getting a lot of business right now.
It certainly is, yes.
So
Well,
let's
sorry, John, go ahead.
we have time for one more, or are we out of time?
Let's do a quick one. Yeah, one more.
All righty.
Yeah.
Beautiful, beautiful breakout here on the Dollar Tree stock. Just very interesting breakout, holds the breakout level. And in fact, we're at a point where we have, again, a long low structure along the bottom of resistance, holding us up, excuse me, support, and narrowing bands. We've pulled back to the 50, which is still rising along with a rising 200. Very, very interesting. Is this potentially a place to look for opportunity in the world of Wyckoff, Professor?
Potential cause that goes from November all the way back to December a year ago, late 2020, and just a beautiful jump up and out of this whole structure, which is a demonstration that September low is like a shakeout. And once it comes back up into the structure, it just starts marching straight up, which shows that everything that occurred preceding it was the process of reaccumulating shares into strong hands. So now that there's been a jump up and out, we would look for a flat, narrow consolidation, which shows that stock is in strong hands. And then we would look for the support or the stock to hold somewhere in the area of the support, not to get back into the area of the gap and then be able to continue its prior uptrend. But this is what reaccumulation looks like. And it is very frustrating for traders until it's ready to go. And now it looks like it's trying to establish a steady uptrend. So really an interesting stock, I must say.
Fascinating, fascinating. Well, thanks so much for having me on the show, Professor.
Oh,
always
John,
a great pleasure.
Oh my gosh, we're going to do a lot of this because, you know, this project is very exciting for us. We call it the Dream Scan. John calls it that. And we're putting these attributes in it. We want to share them with you. It's a work in progress. And we are going to become scan masters like Johni Scan. And with that, thank you, John. And we will see you all next week. And thank you much for staying on for our overtime segment.
Great to be here.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.